And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. ABSA is an authorized FSP and registered credit provider. Good evening. Welcome to the program. Well, something happened today that I don't think I could have predicted. Some people who've been watching the story more closely than I have might have predicted this. You'll hear from one of them in just a moment. But Park Stow, someone I've reported on for many years, minister now in the coalition government of trade, industry and competition, siding with business and against the Competition Tribunal in the Competition Tribunal's decision to stop the merger between Vodacom and Maziv. In other words, really, to allow Vodacom and Vumatel to work together. It is astonishing in some ways, and it does suggest that maybe the wind has changed direction in government policy. Let me put it like that. We'll find out a bit more about it. And I mean, if this is the case, the consequences will not just be for this deal, but for other deals too. I mean, everybody knows that Canal Plus, the French entertainment company, the television company, is looking at taking over DSTV. Now, the government can sort of be quite cooperative, can not be. This would be part of that, perhaps. We've seen the same minister, Park Stow, former mayor of Joburg, of course, also really getting involved and making sort of, what would be the right phrase, murmurs, I suppose, comments about possibly allowing Starlink to get around some of the BEE legislation and operate in South Africa. This is all coming from the same minister. I think it's going to be fascinating. I think there are going to be all sorts of issues that come from this, and a lot of people will be looking for tea leaves to read. We'll get you as many tea leaves as we can for that. Numbers out of Statistics South Africa today about the number of liquidations. And when you look at liquidations, I mean, every liquidation is a sort of tragedy in its own right. There's a story behind each one, and somewhere there's a very disappointed and upset and possibly unemployed worker. There's a very disappointed owner behind the liquidation. I was surprised by a couple of things. If you look at the 10 months to the end of October, if you look at that segment, the number of liquidations over that period are lower, about 3% lower than they were a year ago. Now, if you look at load shedding gone, look at the sort of change in sentiment, we were just talking about that with the deal a minute ago, things like that, you would expect that, okay, maybe the number of liquidations would be down. Then there's a huge spike in October. A massive spike, up by 40%. It doesn't really make sense. Now, it might just be a statistical aberration. It does happen sometimes with numbers, but still, lots to look at there. And then the integrated resource plan, more on this in about 20 minutes, half an hour from now. This is the policy that government uses to decide how much electricity is getting from coal, how much from nuclear, how much from solar, wind, and so on. It's always been hugely controversial and lots of criticism for the former Minister of Energy, Grootes Mantashe, and he, of course, is coming for a lot of stick about it. It does look like that's going to change. The current Minister, he's the Minister of Electricity and Energy now, saying that there will be a lot more space for renewable energy. Some questions about how quickly this is being done, and the document matters. I must just say, the question I would ask is, I wonder if government has lost control of electricity policy. And I realize on one level that sounds ridiculous, but if you consider that one of the main reasons we're not having load shedding now is because when load shedding was so intense, people spent so much money on solar for themselves, it makes you wonder if government is actually still in charge of government policy. Good to hear from you this morning. 011 883 0702 021 446 0567, and of course voice notes on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, quite an unexpected twist in some ways in the long and difficult tale of the proposed merger between Vodacom and Maziv that would see Vodacom and Vumatel working together to lay fibre. Reporting both from TechCentral and Bloomberg this afternoon that the Minister of Trade, Industry and Competition, Park Stow, he is from the ANC, joining the appeal against the Competition Tribunal's decision to block the deal. In other words, Stow, really representing government in this, wants the deal to go ahead. Duncan McLeod is the founder and editor at techcentral.co.za. Duncan, good evening to you. Thanks for your time. So many things went through my head when I first read the report. But first, to see an ANC minister on the side of business and against the Competition Tribunal was among the first 5 thoughts I had.
It's a very interesting move and pretty significant that they've decided to join this appeal. I guess it does show us that the regulator is very much independent of the executive of government, which isn't always the case, and that's a very good thing. the fact that there are these procedures and the minister doesn't agree with the Competition Tribunal. There's the Competition Appeal Court that they can go to. And the Competition Tribunal clearly doesn't feel like it needs to line up behind a government minister, and I think that's very refreshing. And I think it's a positive development to see this, and it bodes well for investment in South Africa, and I think it's a positive message coming out of the Government of National Unity.
Do we know at this stage on what grounds Tower is joining the appeal? I mean, why he believes the deal should go ahead?
We don't. I've looked at his founding notice of motion, I think that's the correct term, to the Competition Appeal Court, and it's very brief, as is Vodacom's, because at this stage the Competition Tribunal hasn't actually published its reasons document, so we don't actually know why, in any sort of detail, why it decided to block the deal. But it has said that once that reasons document is published, and I believe it should have been published already earlier this week, so I'm not sure what the hold-up is in that regard. But once it's published, they will furnish a supplementary affidavit explaining why they believe that the deal should be allowed to proceed. So interesting to see the Trade and Industry Minister coming out on the side of business here. It's certainly a turn up for the books.
So, I mean, for a moment, let's spare a thought for the people who have to write the reasons at the Competition Tribunal, because there's going to be so much resting on this, and they're going to look, it could well go to the Constitutional Court as well. Within all of that, though, the bigger question, of course, is whether this is indicative of a change of attitude in government. And if that's the case, I mean, there are other deals in the pipeline, Canal Plus, for example, and DSTV. I mean, a lot of people are going to be looking for tea leaves here, Duncan.
There will be, and it's very early days. We don't know yet. Now, obviously, the Canal Plus multi-choice deal is very different to this one, and the big sticking point there is actually a piece of legislation or a clause in the Electronic Communications Act, which states that foreign shareholders may not hold more than 20% of the voting rights in a South African broadcaster. That law hasn't been changed, and changing the law is a complex process. Canal Plus has indicated that they think they found a way around this. They haven't said what that is yet. Presumably, it's got to do with minimizing or reducing the voting rights that Canal Plus will have in multi-choice South Africa, but they haven't set it out yet. But I'm sure as an investor, Canal Plus would want full control over all of the assets that it's buying, including multi-choice South Africa. There is a process underway now by Solly Malatsi, the DA Minister of Communications, to relook at broadcasting legislation in South Africa, and so we could see a change to that requirement in the Electronic Communications Act in time, but it takes a long time, obviously, for these processes to wend their way through Parliament, and then the President has to sign it into law, etc., etc. So that's probably a 2 or 3 year process still. But it could suggest that the government could be more open than previous administrations to an investment of this kind. So let's see what happens.
I mean, there's Starlink as well, of course. I nearly forgot. I mean, Parks Tau sort of hinted that he would look at a way to help Starlink or to allow Starlink get around BE legislation.
Yes, and once again, Solly Malatsi, the Minister of Communications, has said that he's has asked ICASA to look at rewriting the rules around licensing in South Africa. At the moment, you have to have 30% of your equity if you're a telecommunications licensee held by HDIs or historically disadvantaged individuals. And he's asked ICASA to relook at that rule so that Starlink can use what's called equity equivalence, so not selling a stake, but finding other ways to contribute to empowerment in South Africa. And so there are moves afoot. It seems that this GNU means business when it comes to attracting foreign investment, and I think things are looking up.
I mean, people have been looking for action rather than just words. Let's see. There's another way in which I suppose people will be looking for a little bit of help or a change from government. It's not just the minister's attitude to Starlink or the minister's attitude to this deal, the Vodacom Vumatel deal, but the process. And you've been very critical, I think correctly in many ways, Duncan, about the length of time it's taken just to get this point, and what the minister could do, whether you wanted to, whether you agree with the deals or not, is just streamline the process.
Exactly. I think there needs to. I mean, it's absolutely ridiculous that it took 3 years for this to go through the Competition Commission and the Competition Tribunal. No one can do business like that. It's completely unacceptable. And I think one of the things Parks Tau should be doing is relooking at this. And I think there needs to be some sort of possibly in the Competition Act, there needs to be a clause specifying that the competition authorities have to complete investigations within a certain amount of time, because if you're running a business like this in a fast-paced environment like telecommunications, you can't make business decisions if you have to wait for a regulator for 3 years to tell you that you can't proceed with the deal you wanted to do. It discourages investment. And then the decision at the end of the day to prohibit the deal sends the completely the wrong message to foreign investors who might be looking at the sector and other sectors, who will see how long these processes take and say, well, no, we're not going to invest in this country. We'd rather go to another country where the competition regulator isn't going to take 3 years to make a decision.
Duncan McLeod, thank you so much. Founder and editor at TechCentral.co.za.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
So I didn't know this when I woke up this morning, but it turns out that the price of diesel is 3 times more volatile than the rand. In other words, diesel prices are moving up and down incredibly quickly. Diesel prices becoming more of an issue recently, I suppose, particularly because more people were buying diesel generators and more companies just using them or having them around just in case. Even if you're just transporting food or people around, diesel prices really affect you. John Kearns is a global markets executive at R&B. John, good evening. You've suggested this is leading to more firms trying to hedge the diesel price. How are they going about doing it?
Yeah, no, exactly, Stephen. So picking up on your first point, as I pointed out to you regularly, we have one of the most volatile currencies in the world, and corporates in South Africa hedge the currency all the time. But exactly as per your opening line, diesel prices are excessively volatile, so 3 times more volatile than the rand, so they have to hedge it as well. To your question, we have good instruments in South Africa, obviously. As we know, as we're part of the RMB and all the local banks, we have very sophisticated local markets to hedge instruments. So we can hedge the diesel price, and many companies are doing that. In fact, it's really a growing market.
How do they do it? Sure, some companies will just have big tanks of diesel, but actually there are regulations around that. You need a license to do it. Diesel doesn't last forever. So I presume you're talking about something a little more sophisticated.
Yeah, not substantially more sophisticated. Stephen, as you know, we have a monthly fuel price that's announced by the regulator. I think it's the first Wednesday of every month. I'm sure you announce that regularly. Petrol prices and diesel prices are changing. And that number that they're announcing is based on a formula. So it's the global fuel price of oil, the price of refining the oil, the price of moving the fuel to South Africa, all our regulated tax, that determines the price. But what essentially is happening is the global fuel price is a primary determinant of what happens in our local petrol price, local diesel price. And so we can hedge that global price in rand terms. So corporates out there with exposure, they can get away from their risk of movements in this very volatile market.
It can still be quite hard to know what fuel price is going to do. I appreciate what you say about the formula, but for example, right now, if these sort of peace deal in the Middle East that sort of involves, Beirut and Lebanon holds, you would expect diesel prices to go down, but maybe not. If the Chinese stimulus works, there would be more demand for diesel. Maybe prices would go up, but maybe not. In other words, you've got to think about it all quite carefully. You probably need a couple of professionals on the job.
Professionals at R&B, Stephen, but more to the point, managing risk is not really about speculating about the price. Corporates need to know what their prices are, need to know what cash they got to pay out, how much they got to charge customers to make a profit. So what we always emphasize, it's really not about speculating about the price. That's not for corporates. That's for hedge funds. What you want to do is manage your risk, take your risk away so you can give your clients a stable price, make sure that you've got your profit locked in, etc. But back to your point here, what about Trump boosting fracking? What about potential sanctions on Iran? And it comes back to the first point where you started. There is just extreme volatility in the oil price historically, but even more so locally. Just go back a few years, obviously Ukraine, Russia, that's important. All those geopolitical factors. Yes, the oil price could double. Yes, the oil price could halve. and that's what corporates really need to manage.
John Kearns, thanks very much indeed. Do appreciate it. Global Markets Executive at RMB on The Money Show. I don't know if your company is hedging the cost of diesel.
The Money Show.
The markets.
Chris Stewart's portfolio manager at 91. Chris, good evening. So, 24 hours ago, last night, Anglo American Platinum, its accelerated book build at Amplats. I think it's the last time this is going to happen, but obviously that process of the demerger between Anglo American Platinum and Anglo American is moving forward.
Yeah, good evening, Stephen. That's probably one of the bigger drivers in the market today. You saw Anglo's up over 2% and Anglo Platinum down more than 2% as Anglo's announced last night or announced this morning the outcome of the second placement of Amplats shares that they've conducted recently. They did a smaller placement in September. So they announced that they placed 17.5 million shares. That's about 6.6% of Amplats at around 548 Rand a share, raising 9.6 billion Rand or about $550 million US. And that is part of the demerger process that is on track for mid-2025 and is part of Anglo's broader restructuring that was precipitated by BHP's unsolicited bid for them earlier this year. So, Platinum is one of the assets which they will be either selling or unbundling to shareholders. And as you indicate, they've intimated, although I don't think necessarily 100% confirmed, but intimated this will be the last of the Amplats placements that will happen prior to the broader restructuring in the middle of next year. They've announced earlier this week that they're selling their coal business. They've indicated that they'd like to exit their nickel and diamond business, and really an attempt to simplify the portfolio, focus particularly on copper, which I think will be about 60% of the portfolio post the rationalization, with copper being very much the in vogue commodity at the moment, given where the world is and where the world is going. And that may protect, I guess, existing Anglo's management and the company against further hostile threat, but equally well, it may make it a more attractive focus play. Either way, I think shareholders are largely benefiting from what's going on.
I mean, BHP, from what we know, doesn't seem to be going away. Lots of speculation they're coming back for another bid.
Yeah, there is speculation, and Anglo's will carry on doing what they've promised to do to their shareholders, showing their shareholders that they can simplify the business, reduce complexity, reduce costs, and attract a better rating for the residual assets that remain within the business, and that's probably the best form of defense right now for them.
Several retail stocks with numbers out and updates and results in the last little while, and it does seem there's still quite a lot of resilience in the consumer at the moment.
Yeah, even accelerating perhaps, Stephen. I mean, we've seen a number of retailers reporting results recently. The most recently being PEP reporting yesterday, Mr. Price a couple of days prior, and a characteristic common to both of those sets of releases or numbers has been that the retail sales, particularly post the September 30 reporting period, appear to be fairly robust. Now, you can't think of too many reasons why consumers should suddenly be feeling that much better off or that much better about things. Yes, we've had 2 25 basis point rate cuts so far, but I don't even think consumers have had time to feel the impact of the second rate cut on their monthly installments yet. What we do have, however, is the so-called potential two-pot windfall, people being able to access their retirement funds or a portion of their retirement funds earlier than was previously the case. And it does look, certainly from some of the numbers that SARS have been putting out, some of the numbers that some of the big pension fund administrators have been talking to, that the numbers are on track to stack up at somewhere between the 50, 60, 70, 80 billion Rand windfall that had been speculated in advance. And it looks like quite a lot of that is being spent on consumer goods, and less of it perhaps being utilized to consolidate people's finances. Although it was interesting to me last night in their pre-close trading update, First Rand was the first bank to actually mention that they had noticed what they thought was, part of the reason that they were seeing improved consumer credit quality was that they did see some sort of large inflows coming into consolidate accounts to clear arrears within accounts, which may also be a function of two parts. So it looks as though both the retailers and perhaps to a lesser extent the banks benefiting from this trend.
It's been interesting watching Pick n Pay's share price over the last week. I mean, literally up 2-3% every day over the last little while. And obviously the Boxer listing tomorrow, lots of anticipation for that. And I suppose the JSE is quite excited too.
Yeah, lots of excitement. I mean, another retailer in town, more trade, hopefully on the JSE for the JSE themselves, and Boxer really being viewed as the jewel in the crown within the Pick n Pay portfolio, and Pick n Pay choosing to, perhaps Pick n Pay in conjunction with their bankers, choosing to float 35% of that company or sell 35% of that company, which will start trading tomorrow. And I have a feeling it will be one that goes pretty well, given where Boxer have come from, some of the financial results they've been printing, and some of the growth aspirations that they have, particularly at the lower end of the food retailing market.
Thank you very much indeed, Chris Stewart, Portfolio Manager at 91, just after 6:30.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, good to hear from you tonight. I don't know if you have a view on Parks Tau, the Minister of the Department of Trade, Industry and Competition, siding with business, siding with Vodacom at least, in their sort of appeal against the Competition Tribunal decision. There's a lot going on in that. And I wonder if it is the beginning, and you heard that conversation, you can hear it on the podcast as well. But I do wonder if something is changing. And I suppose also the idea is it may just be on this particular deal that Tau thinks that perhaps it is just better, as Vodacom and others have suggested, because the money is needed for investment in fibre. 011 883 0702 021 446 0567. There's been lots of conversations of late around the number of companies delisting, leaving the JSE for various reasons, some going elsewhere, some no longer public companies. Of course, tomorrow, Boxer from Pick n Pay is joining the JSE. It'll start to trade. I think there's a lot of anticipation about that. We'll talk about essentially how it works, an IPO, an initial public offering, the mechanics of all of that, the technicalities of that, an investment school tomorrow evening. Some fascinating trends coming out of numbers released by Stats SA today on the number of companies being liquidated. If you look at the figures for the first 10 months of the year, from January until the end of October, I should say, there's a 3% decrease. Okay, that sounds like good news. Come October, a massive spike. The number of liquidations last year, 136. This year, 196. Ntlhane Makena is the head of the Insolvency, Restructuring and Business Rescue practice at ENS. Ntlhane, good evening. How do you read these numbers? I mean, I'm hoping October is just an aberration of some kind.
Evening, Stephen, and evening to your listeners. I think it's actually quite interesting for people outside of the industry, but for us in the industry, it's probably on par with what we see as the busier period of the industry. I think a lot of companies are probably fighting tooth and nail to keep afloat, and towards the end of the year, all of their efforts, sometimes come to naught, and this is what you see, a spike in the numbers. But I also think it's a function of, the economy and where it is, that you see that the numbers are starting to spike towards the end, despite an overall trend of having less and less liquidations.
I mean, I can understand the sort of end of the year idea. People say, I'm going to try and make it towards the end of the year, or this is what I have left, I'm going to give it all. And for various reasons, you come to this point in the year and you just can't go any further.
Yep, I think it's actually one of the things that we try and counsel people out of, which is to take action early rather than spend money on trying to keep something afloat that you can work out and restructure much earlier in the year with more better results in terms of the outcome, whether it's a continuation of the company or better value that you can get for shareholders if you want to sell it, or creditors get a better return. But it just seems that it is a function of, the human psychology to try and hold on for as long as possible, and sometimes for too long.
I don't know if you're aware of the concept of ego in Ntlhane. It may be related to that.
It is part and parcel of the gift and the curse, because I suppose to be a business person, you do need some level of ego and belief in, some of your ideas. But often when things go bad, people hang on to that, self-belief, even though it's misdirected. And it's evident if you think about it, Stephen, some of the biggest business rescues, they all happen towards this part of the year. And I know we're talking about liquidations, but they are a function of the same, sort of thinking and how people manage their businesses. And it is just a cycle of holding on for too long and then ending up where you are.
So I imagine the arguments about why the number of liquidations goes up and down, I mean, it's one for economists. Occasionally there'll be a factor which is pretty obvious. And I wonder if load shedding and the end of it is one of those factors. We'll be able to go look through the data in a year or two's time and see if there was a big difference in the number of liquidations, hopefully fewer liquidations, that coincide sort of with the end of load shedding.
Yeah, I think if you look at the manufacturing industry, some construction, and the storage and communication sectors, if you look at how they fare over the next couple of years compared to where they were before, I think you'll see a stark improvement in their performance. But it's clear load shedding had a very negative effect on those industries. A lot of manufacturing companies that we were providing advice to, or we were assisting creditors in the insolvency process, a lot of it was just down to some of the overheads becoming way too expensive because they installed generators and the like to try and combat load shedding, and then some of them just couldn't do that anymore, and it just became unpredictable production patterns. Customers go to someone who's more reliable. But I hope the change in fortunes as far as load shedding is concerned brings about greater manufacturing and production in the country.
Load shedding in a way is sort of quite simple, and I say that because it was very intense and then it sort of stopped. But there are conversations all the time about what government could be doing or should be doing to create a more enabling environment for business. So to try and work out if government is doing that, or if the coalition government is having a positive impact on business, probably takes much longer. Be much harder to kind of know if that's having any impact at all on the number of liquidations.
Yeah, I think it will take much longer. But what is a good sign is a better performing economy. It also doesn't necessitate, Stephen, that the liquidations are all bad. Sometimes it is necessary for a company to reach its end in order for it to perhaps break up its component parts and become a new entity, and for someone to have better fortunes with that type of business. But as a general rule, obviously liquidations are bad, and you're right, you'll only tell much later on whether the project that is the GNU is actually good for the economy.
How confident are you in the data? Because I presume this comes from the Stats SA release today. So this would be formal businesses that report their liquidation. Maybe it goes through SARS perhaps, or someone else before it goes to Stats SA. There will, of course, be lots of informal businesses that don't report when they started or when they sort of closed down.
Sure. So you're right, Stephen. There's always a lag in reporting because the Stats SA gets its figures from the CIPC and the DTIC, and they get the figures from formal reporting that would happen. And again, if I'm a one-person practice or one-person business, I started a company, I wouldn't necessarily wind it up in the way that a more complex business would do. I would just stop trading and move on with it, and then it would ultimately be deregistered by the CIPC. So it does lack completeness in that sense, that there's a part of the economy that's not taken into account just because they don't ordinarily report into the sources of the data. But I suppose this is as certain as you're going to get in terms of, the reporting on voluntary liquidations and also on the court-ordered liquidations, because that's a function of, publication of the court orders as and when they happen. So that one, I think, is probably more accurate.
Such an important number to track. Thank you so much. Ntlhane Makena is the head of the Insolvency, Restructuring and Business Rescue practice at ENS.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. Absa is an authorized FSP and registered credit provider.
Well, the Minister of Electricity and Energy, Makena, tomorrow holding another event around proposed changes to the Integrated Resource Plan, the government document that's supposed to guide how we generate our electricity. In the past, previous editions of the IRP that were produced when Grootes Mantashe was the minister, well, they were sharply criticized for focusing too much on coal. Makena has indicated that this IRP will have more space for renewable energy. Some concerns, though, that the entire process is being rushed. Chris Yelland is an energy analyst. He's managing director at EE Business Intelligence, does work for Outer as well. Chris, good evening. The IRP, a crucial document supposed to guide government policy. You seem pretty concerned about the process, about updating it.
Well, yes, somewhat concerned. And, government seems to be pushed into a corner. They've left things rather late. The year end is approaching. The minister has set certain deadlines. And so they call these public hearings at extremely short notice, only 3 days' notice, 2 of which days were over a weekend. And no information was provided in order to get stakeholders to prepare. The website of the DMRE was down. It's been down for many days now. I tried this morning; it was still down, and this really is making it almost impossible for stakeholders to have a meaningful engagement. And it sometimes feels that this process is sort of reverting to a tick box exercise. It's something that has to be done before the IRP can move to the next stage of the process, and that is the criticism there. Having said that, I do think the people that are doing the IRP are engaging in good faith, doing their best, but are really being pressured into a corner time-wise, and that's the cause of the problem.
I mean, I hate to be this guy, Chris, but I've become so cynical over the years, as I'm sure you've tracked. And when someone does this, when they rush a public consultation, it makes me wonder if someone already knows what they're going to do and they're just trying to ram it through while no one notices, especially at this time of year. It's happened many, many times. Not with this minister, let me stress. I don't blame him for it, but it's happened many times before.
It has, and even with this minister, I am worried that there have been several pronouncements, including by the minister, that nuclear power and gas to power will be a big part of the IRP. Now, that is putting the cart before the horse. It may be true, but I don't think it should be stated up front because, frankly, the whole purpose of the IRP is to determine the extent and the quantum of the different technologies over time, the next years to 2050. And to come out up front before, public hearings have even been completed, before policy adjustment has even happened, before NEDLAC has even had a chance to look at it, and to come out and state some of the outcomes, I think is putting the cart before the horse and does indicate that to some extent, decisions have already been made, and this is to some extent a tick box exercise.
Chris, isn't government or hasn't government lost some control over the process of our sort of energy transition anyway? I mean, during the intense load shedding, private companies, private households, I mean, everywhere you go in sort of urban areas, in middle-class urban areas, you see solar panels. That wasn't a government program. That was just people deciding to do it for themselves. Now, I realize that government is vital, but hasn't government lost sort of parts of control of this process anyway?
Yes, it has, and that's not a bad thing. The whole idea of a integrated resource plan for electricity has changed somewhat in the last few years. It used to be a prescriptive process. That this was the way in which new generation capacity was going to be built out. It had to follow what is in the IRP. You needed a license for generation from the minister, and that would only be given, to generation that fell within the planning process of the IRP. Now, this is changing significantly, and the IRP is no longer a prescriptive plan. It is what we call an indicative plan. And as such, you know that the licensing requirements for new generation capacity have been dramatically relaxed in recent years. And so this IRP really only applies to what we can call the public procurement process, for which ministerial determination is required, and a Section 34 determination is required by the minister, as well as concurrence by NERSA. Now, the private procurement process, including rooftop solar PV and battery energy storage for residential, commercial, industrial, mining, agricultural installations, the whole concept of wheeling, virtual wheeling, trading of electricity, all of that falls outside of the public procurement process and is not covered in the IRP as a prescriptive requirement any longer.
I mean, there's so much so many moving parts to all of this. And I still can't understand how Eskom could last week tell everyone that if you don't get your meter sorted out, you're going to have to pay 12,000 Rand. And then today issue a statement saying, we can still help you. I mean, when you have situations like this, I just worry that the whole process is losing legitimacy.
Well, look, this whole idea, this recoding of the meters, which is a technical matter, it's similar in principle to a software glitch that one had. For example, remember the year 2000 when there was a rollover of the calendar year to the new millennium. The software, it wasn't handling that properly because they used only 2 digits for the year instead of 4. And there's a similar kind of a flaw, you might call it, in the software of prepayment meters and the vending systems. That's a register that has to roll over at a time stamp register. Has caused this problem. It means that the software has to be upgraded. But as a byproduct of all of this, has come out the fact that there are millions, in Eskom's case, about 2 million, and probably another million or more in the municipal environment, of people whose meters are actually not registering, the sale of electricity. And what's really happened is that, people are using ghost vendors to buy electricity, bypassing the meters, tampering with them, and interfering with the meters so that they don't have to pay for electricity. And the whole process has shown up this large number of people that are effectively not paying for electricity. And Eskom is now using this opportunity. Now, I don't know why it has taken this rollover to bring this to the fore, because the vending software has all the necessary facilities built in to identify and to detect people that are not buying electricity. And so why it's taken this to bring it to light, I don't know. But they've used this opportunity at this time to try and now do something to regularize the millions, the 2 to 3 million customers who are not paying for electricity, and to identify them, to crack down on them, and they're going to have to pay penalties if they have tampered with their meter, as well as if they've damaged the meter as a result of tampering, they're going to have to pay for the new meter itself. So it can be a very costly exercise for people to regularize their affairs with Eskom or their municipal distributor.
Chris Yellen, thank you so much. Energy Analyst, Managing Director at EE Business Intelligence, just after 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
Thanks for being with us this evening. Good evening. I'm Stephen Grootes. Welcome to the second hour of The Money Show tonight. Good to hear from you on 011 883 0702 and 021 4460 567. Voice notes as well, please, on 072 702 1702. An astonishing story that Wendy Nola came across, something that really did surprise me, was a problem a person had when they put more money than they were supposed to into their car loan. I mean, they basically had a higher repayment, and they did it for a very specific reason. It was all arranged and all the rest. And there was all sorts of snot and trana afterwards. You'd think a bank would be very happy to get its money in advance, but often they're not because they earn less interest. And the person seemed to get in the middle of that. Well, we'll hear that from Wendy in a moment. We'll talk about X, not that X. We all know who the owner of that X is, but what X as a service is. And I think that X as a whole is just getting a little bit of a bad rep because of, that person. Well, Tshwane, you can take the blame for that. Thanks very much indeed. And then, don't forget, from 7:30, your shapeshifter tonight, Tsepo Mohlala, the founder, creative director of Tsepo Jeans. And let me just get this disclaimer up front, out the way very quickly. I'm the kind of person, I'm afraid, who once I've discovered what style of jean works for me, I go to the same shop whenever I need to. I get the same style. I hope I still fit in them, and that's it. But I know for a lot of people, jeans are much more important than that. The Money Show with Stephen Grootes is brought to you by Absa CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters Series podcast. Absa is an authorized FSP and registered credit provider.
The Money Show.
Business Unusual.
Well, you've heard of the idea of X as a service. It's not really a new idea. If you've used Airbnb, if you've used Uber, you've used one of these services. Graham Codrington, futurist, partner at Tomorrow Today, he looks at the future of work. He thinks that, in a way, this idea might actually apply everywhere. Graham, good evening. Good to talk to you again. Firstly, the idea of X as a service. I mean, we see it in different ways. How would you define it?
Thanks, Stephen. Good evening. Yeah, you stole my line about X, the social media platform. We're not talking about that, and it certainly has stopped being a service, in my opinion. But when we say X, we're sort of looking at the way of changing our mind. Some people might feel we could think about this just as a leasing option. So instead of buying something or buying an asset, you have the opportunity to just borrow it or use it for a certain period of time. But it goes beyond just leasing. So as you say, Uber and Airbnb are great examples where people can use their own private assets and then have a service that they offer to other people. So Uber, the old statement is that Uber is the biggest taxi service in the world that doesn't own any of its own cars. And if you then extend that into other areas, into other industries, you begin to realize that that model has really come into play over the last decade or so. Simple example, most people don't actually own their music collections anymore. You have music as a service through Spotify or Apple Music or whichever platform you prefer. You don't, in fact, even own the software on your own computer. Microsoft Office, you pay for it as you use it or on a monthly basis. So it's kind of an idea of leasing. It's not a new idea, but I think in the digital world, we're able to extend what products and services are actually able to be offered on this basis.
I mean, in most cases, it doesn't really matter. I want a taxi ride. I'm getting my taxi ride. It doesn't matter to me who owns the taxi. The same for Airbnb, incidentally. I wonder about music and video streaming, sort of music more, because with music, the moment you stop paying a subscription, you can't listen to that album anymore. You can't listen to that playlist. It's gone pretty much forever. Whereas in the past, you did used to own it and you didn't have to keep paying the monthly subscription. And yet there's no pushback against the idea at all.
I was speaking to a group of people, I think you might be slightly younger than I am, Stephen, but around about our age, let's say people in their 40s and 50s. And this group was arguing that there is a reason that most of us in our 40s and 50s are pretty grumpy with the world, and that is because we have bought our music 4 times. I'm old enough to have started my music collection on vinyl. I was then forced to shift to tapes. I was then made to repurchase everything once more on CDs just to get that quality up again, and now I've got to rent it. And as you say, if I stop paying my rental, I lose the whole lot. If they change the music system one more time, we're going to burn the whole place down, I'm sure.
I like the way you put that.
So yeah, there is a downside. There is a downside, right, to the model, but it is the model. and there are a lot of industries who are using it now.
You talk about the world's biggest X as a service. You say it's in Dubai. What example are you talking about?
I'm not going to put any money on this. I'm sure somebody else is going to come in very quickly on the various messaging channels and say there's something bigger than this. But I think I found the biggest version of this, and it's DP World. So let me tell you the story. We have to go back quickly in time. Back in the 1970s, Dubai didn't really have a port. There, if anybody's been to Dubai, if you go to the old city, there's a creek. And that was all there was. Small little skiffs and ships could come up to the creek. They then decided to make a bigger port, which they did. And then in the early 1970s, the then new leader, who is now the father of the current sheikh, he decided he wanted to build a really proper deep water port. And he got all of his futurists involved and his economists, and they came and suggested to him that he needed 4, I think they called berths. I'm not sure the exact language, but 4 of these port berths. And he went back to them and said, "Okay, excellent, thank you. Build 15 for me, please." And they said, "No, sir, I think you misunderstood. We looked into the future. We tried to work out the trends. We think 4 will be enough." And he, of course, said, "Well, it's my money, my decision." And they built 15. And those 15 are now fully working all the time, 24/7, and sort of through the 1980s and 90s, they just developed more and more and more. It is now one of the busiest ports in the world, and certainly it brings in nearly a quarter of Dubai's GDP. We tend to think of Dubai as being a luxury destination and oil, but Dubai ports is a huge part of their economy. But here's where the story goes to as a service, because DP Port Authority, as it was called then, decided to, so that's Dubai Port Authority, DP, they decided to not just stop there. We now have, they thought, the capability of running a port. We don't only have to run the port that's on the land we live on. They could keep employing people. They could take the technologies, the software, the processes and ways of working that they had developed, which made them a successful port in Dubai, and they could begin to go and offer those services to other ports around the world. Essentially, ports as a service. And they now manage more than 70 ports all around the world, including quite a few in the United States. You can imagine that has caused a little bit of consternation every time. Normally a Republican government comes in, they relook at that because they see that as a threat. But all around the world, including some really significant ports, the DP, now they call themselves Dubai Port World or DP World. Most people know them, I think, through their branding of sports events, and they've listed now as a separate entity on the stock exchange, and they now offer ports as a service. And I'm pretty certain they'd be able to expand even beyond the ports that they've got at the moment. I think it's a really great example.
It's the kind of,
sorry, Stephen.
No, it's the kind of thing that could work at Transnet too. We're seeing something in a way quite similar. Could governments do a bit more of this kind of idea as a service? I mean, businesses, sure, and there'll be other opportunities for businesses. Can government sort of use this kind of thinking perhaps a bit more?
Well, I was looking around for examples because, we talk often about business unusual, and there are some remarkably unusual as a service offerings. There's, for example, Japan Air offers clothing as a service. If you travel on Japan Air to Japan, you can rent your clothes for the week you're in Japan and literally travel with no suitcase on the airplane. That might be a step too far for some people. I came across a company called DogSpot, which offers you a pet as a service. In other words, you might want a pet for a certain number of weeks or months in the year, and it's almost like sharing pets. Again, for some people, that may be a step too far in terms of doing that. But if you begin to put your mind to it, Stephen, I think you could look at almost any function, whether it's in a business or whichever industry. And then, of course, you could push towards government. And I wonder if this might be a way for government to go beyond just what we normally think of, which is your PPPs, your public-private partnerships, where you sort of get some for-profit businesses involved and partnering with business to deliver certain services. And you move towards an environment where you offer, it could be anything from education to healthcare to transportation, as a service, working with private and government together. I definitely think it's something to consider. It's certainly worked well in other industries and is the backbone of the success of many of the biggest companies and services we know in the world right now.
Well, Graham, anytime you want to rent my CD collection, let me know. Graham Codrington, futurist and partner at Tomorrow Today.
The Money Show.
Consumer Ninja.
Well, as you know, when you take a loan from a bank, if, for example, you want to buy a car, they do all sorts of credit checks. They want to make sure that you've paid back all of your other debts. They want to make sure that you pay the minimum, that you will pay the minimum amount every month. But what happens if you do the opposite? If you decide to pay installments in advance and suddenly you still get demands from the bank? Well, Wendy Nola is, as you know, your consumer ninja. Wendy, good evening. I mean, it's an interesting question. When you take a loan from a bank, you don't really expect to pay it in advance, but in this case, somebody wanted to do it.
Yes, indeed. This was a first for me, Stephen. So as Mazibuko of Port Shepstone put it to me in an email that she wrote a couple of weeks ago, last November, a year ago, I made a call to Absa Vehicle Finance asking if I could pay my installment in advance, as I could see that I was going to be having some financial difficulties in the coming months. I thought it was quite clever. So she had some savings, obviously, and she thought rather than be that money be whittled away on other things, she was going to make sure she wasn't going to lose her car. And so she paid the last few months. The last installment was due 2 months' time, January next year. So she had this phone conversation. It was agreed, right, that she was going to pay them a 45,000 Rand lump sum a year ago, and that her monthly installment, which is an agreement with Absa, is 2,900 Rand a month. That was going to be paid every month out of that 45,000 Rand lump sum, covering the 15 months remaining, and will take her to the end of her contract. All sorted. Car, no chance that she's going to lose her car or not, not be able to pay the installments. And she thought it was all sorted. But yeah.
But as you say, it wasn't. What went wrong?
Well, it started out really well. Everything went according to the plan that she'd made. The debit orders were met as if she was paying in the money every month. Until last month, October, she got a call from the bank saying that she'd missed a month's statement. So obviously confusion there, because she thought that she'd made excellent plans. She said, they told me they had capitalized the remainder of my money, which was about 9,300 Rand, and that I now needed to pay in. They said that they can't pay my installments forward, and there's nothing I can do about it.
But
Very odd.
Okay, but I mean, she must have made an arrangement. I mean, and they took her money. They didn't pay it back.
No, they didn't pay it back. And obviously that sum already included all the interest and everything, right? It was in the agreement. So she was arranged to pay, 2,900 Rand a month over how many months? And these were her last 15 payments. I think the person who was in charge with making sure this happened every month must have gone on leave or something, or left the company. Who knows? But yeah, she got a hold of Absa and said, please listen to the call of last November. It's all there, what was agreed to. I don't know why suddenly it's gone wrong. I don't have the money. That was the point. And as she asked for the call recording, that was ignored. She never got it. And she said, her plea to me in that email, Stephen, was, please can you assist in them cancelling this capitalization and continue with the agreed arrangement? So I did just that. I said to Absa, why did Absa Vehicle and Asset Finance stick to the agreement for almost a year, 11 months, and then decide to capitalize the last 3 payments? I said, I think others who may be contemplating, I don't think that many, Stephen, but there may be others who were in a similar situation and wanted to plan ahead, avoid having their car repossessed, wanted to pay to their car loans, maybe they would also misunderstand what would become of those funds. So I got a response in the name of Charles Potgieter, who's managing executive of ABSA VAF, as they call it, Vehicle Asset Finance. National Credit Act dictates that a credit provider must accept any payment under a credit agreement and credit such payment as it's received, firstly to satisfy any due or unpaid interest, then to satisfy any due or unpaid fees and charges, and then lastly to reduce the the principal debt. And I mean, many people can relate to this, especially with home loans. It takes a long time. You're paying every month, and it takes a long time for that balance to reduce, right? It's settling interest and everything else. So to satisfy these regulatory requirements and ensure that customers receive the interest benefit on all funds paid in advance, they're saying they're doing her a favor because they want to pay that money to go and attract interest. ABSA systems are programmed to capitalize any funds in advance after each installment due date. And when entering into an installment sale agreement for vehicle finance, customers agree to pay the loan by making monthly installments on an agreed installment due date. Alternative payment arrangements can be accommodated, said Potgieter, on an exceptional basis, but this is not ideal as it involves manual intervention, which can result in operational errors, as appears to be the case with this complaint. As I said, I think the person who was always doing it every month religiously must have just suddenly not been there.
Okay, so I mean, I understand banks have systems. You're dealing with large numbers. I get all of that. So clearly something went wrong. I mean, what happened after that?
So the good news was that after I took up the case, Mazibuko's account was what they called, I love corporate speak, manually remediated. So they overrode the computers and said, right, okay, we need to stick to the plan here. And they apologized. And I got the corporate line. It's our ambition to deliver an intuitive and seamless customer experience at Potgieter. Whenever we identify lapses in our service levels, we are committed to resolving these cases swiftly. Beg your pardon. But in this case, that wasn't the end of it. It wasn't that swift because Zibuko got hold of me to say she did get an email from ABSA a week before last saying the matter had been sorted out and directing her to contact the bank's call center. But when she complied, she was told, no, the computer says no. There's no indication of any remedy here on the system. And she was then asked to send proof that she'd paid that $45,000 last year, and they wanted to see her bank statements. And they said, we'll get back to you in 2 or 3 days. And so she did everything last Friday, and then she got hold of me to say she'd heard nothing, and plus she's worried about an arrear amount that was due because of their alleged non-payment, right? So I went back to ABSA with it, and then I suddenly realized earlier today, Stephen, I hadn't heard. So I phoned Mazibuko and a little while ago, and she said, no, it's all sorted. In fact, it was finally sorted out just yesterday. Arrears cleared. She's, the money, the last 3 payments are going to be made out of that lump sum, and by January her car will be paid off and she's free and no harm done. So that was a nice ending.
I mean, there's a lot to it. I mean, a lot of this is about the recording, and often, and you've brought this up before, they have a recording. Your calls are recorded for blah nonsense.
Quality purposes,
But it's quite hard. You can do it actually on a cell phone quite easily to record your end of the conversation too.
Yeah, and the apps that you can download, and a conversation like that is definitely one. You're instigating it, so you've got the time to do it. It's not a telesales call, right? That kind of call you should most definitely record. And I would say, what could we put that in writing as well, please, so that there's like a double mandate, as it's called, because things, with special arrangements, things could go wrong. And in this case, she had to turn to me for help because she wasn't getting the recording. They were saying you owe us money. She didn't have the money. Her well-laid plan was going up in smoke, and she didn't know what to do. So yes, as always, protect yourself. Make sure that you have a copy of, especially, as I say, a special arrangement that can very easily go wrong.
It's amazing, you try and do the right thing, and so often something goes wrong, doesn't it? Isn't it just the way of things in so many ways? Wendy Knowler, thank you very much indeed. Your consumer ninja with you on The Money Show. And as always, just try and keep as much information as you can and make sure that it's accessible. In a moment, your shapeshifter, Tsepo Maghlala, founder and creative director of Tsepo Jeans. about what it is about denim, about the changes that Tsepo's made to the industry, about standing out from the competition. Tsepo McLeod, your shapeshifter this evening on The Money Show. Just bringing the time to 7:30.
The Money Show.
Shapeshifters.
23 minutes to 8 the time. Tsepo McLeod, founder, creative director of Tsepo Jeans. And Tsepo, good evening. Thanks for coming in. I'm so sorry to mention this, but the first thing I did was kind of look at the jeans you were wearing. They're a little better than mine, a little bit more fashionable than mine, I think.
No, I didn't think so, hey?
No,
I looked at your jeans and I was like, you chose the right fit. You chose the right color.
I chose them?
Yeah. You chose the right fit. You chose the right color. The fabric looks amazing. But I think if we put a crown on it, it takes it to the next level.
Okay, all right. Well, I'll take the advice on spec. You're famous for jeans. You started life in Sakana. You grew up in Sakana. And
yes.
You know, in the past, you've also described being brought up, and you say there are 3 strong women in your life that made a big impact on you.
That's my mom, my aunt, and my grandmother. I love them dearly. You know, every time when I think about these individuals, I cannot thank them enough. You know, I always tell the story, you know, like my grandmother is a storyteller. She's amazing at storytelling. And growing up, I wanted to be like my granny, you know, and I wasn't brave enough to be a storyteller and jump on stage and in front of thousands and thousands of people. I'm actually shocked that I'm on a radio station today and I'm speaking on the news, but she inspired me to be in storytelling, and I saw the power of how stories can connect people. You know, her stories connected the community. Her stories made the community to come to our home. Her stories kind of showed me a different life. You know, I remember when I was a kid, people would come to our house, you know, early in the morning, 2 a.m. When a person goes for a job interview, they come to our house and ask for prayers. You know, you see the gangsters, you see the businessmen, the pastors, and, you know, the poorest person in the community. And my Oma wanted us to treat everybody the same way, whether they're rich, whether they're poor. Everybody had to be treated the same way. And I've taken that into my business. You know, if a person walks in, it doesn't matter what they buy. They still get the most premium and luxury experience. My mom is unbelievable. She taught me the spirit of hustling, you know, and resilience, and which is a word that my business partner hates a lot.
Me too.
But I think under the circumstances at the time, she taught me how to hustle. She taught me how to fight for what I want. She taught me to, you know, like see that life doesn't end where we are. You know, I always believe that the hood is not a real place, you know. And being in the hood where I lived, so the street faces the north, the east, the west, I mean. And every night when the sun goes down, you see that Joburg skyline, and then you go inside the house, 8 o'clock. Generation starts with that Joburg skyline and the dreams and the magic of what happens in Joburg. So all my life I've been dreaming of coming to Joburg and becoming something. And these women in my life really, really inspired me to be that.
You had a fashionable aunt. I don't know if there's a better word than fashionable, but someone who gave you a sense of style.
She was the first person to be exposed. And she was exposed in a way of like she went to varsity, one of the first few people in our neighborhood to go to university at the time, close to me. And back in the early 2000s, denim on denim was a huge thing. And I'd see her like during school break. She'd come back home. I remember this one time vividly. She was wearing Spice Girl boots and skinny bootleg jeans and a nice denim shirt, denim jacket, and a white T-shirt. And I was like, damn, I just saw this on TV. And all the R&B guys, the hip-hop guys, everybody's wearing this. So I was like, damn, like if I go to varsity, I'm going to be stylish like the guys I see on TV. So she made everything that I dream of. When you look at TV, those are dreams. You know, when you hear radio, it's dreams, because like, how do people get inside this little thing? And she made that little thing come into reality. So that inspired me. I think it's sparked my voice. When I was a kid in church, my life was school, home, church. And kind of started using church as a playground where, because I'm shy, so the only way for me to stand out is my clothes. In school, I can't stand out, so I used to wear my school uniform like full. and I always kept it clean. So I could stand out because of how I put my uniform together. So clothing has been like a way for me to kind of express myself. And I realized denim is a platform that I enjoy more than any other platform.
I'm going to come to the denim in a moment, but you're going through school, you're finishing school. Clothes, fashion, denim wasn't really the thing on your radar. In fact, I think you were looking at studying filmmaking first. And I mean, I imagine at the time, people still talk. You talk about generations. People talk about Sister Bettina. What is it called? Soul City.
Yes.
Things like that. And people. I mean, they had a really powerful impact on generations of people. I'm sure that was one of the reasons that you were interested in doing that.
I think for me, I was really influenced by the friends that I kept in school. We were all kind of nerds, and we were all outcasts. So we didn't look like everybody in school. We were weird-looking kids, and we were just weird. But I mean, for me, what laid the foundation was the church that I went to, AFM Ihlumela in Tsakane. And there was this class that we used to go to as teenagers. As you become a teenager, it's called bridging class. And there was this one leader in our church who took it upon himself to raise the kids in the community, and he was the leader of the church. So he created this course called the Bridging Class, and all these young guys, and he taught us how to dream. And he was a lecturer at UJ at the time. So he was every Sunday he would ignite dream. It's his class starts at 6:30 in the morning. You can't wait to get there at 6 a.m. because he comes with fire, and he made us feel like everything that you think of, you can achieve, So that kind of influenced a lot of my decision making. Going to varsity, going to filmmaking was a byproduct of what I did at church as a very active individual, as a young person in church. That inspired me to go to study filmmaking. But of course, my grandmother, who was a church leader at the time, she had the power of capturing people using storytelling. And I found a camera at church, and I was in media at church. And I kind of saw that as my way out of the township.
So you're studying that. You don't do that now. You do something else now. How did you end up in this something else? So I mean, clothes, okay, they're in your consciousness.
Yeah.
Filmmaking, the very visual clothes matter. You really get to understand that. How did it suddenly become your thing?
When you start dressing well, everybody tells you that you are a trendsetter.
Yeah. It's never happened to me.
And I was that guy, I was that guy, one of the first few guys in my neighborhood who wore skinny jeans, and people would laugh at me for that. So I've always kind of broken trends, and I've always loved clothes. When I used to get at church, we used to get hand-me-downs, and because as a pastor's kid, I was one of the first few people to go through the pile and find what I like and work around with what I like. I used to sell suits at church. So clothing, I had my first brand at church selling T-shirts. So I've always been around this clothing space, but I never thought I would actually take it seriously. In matric, I was the best dressed guy. So I've never thought I'd take clothing really, really as a serious or as a career path. When I got into filmmaking, that's when I realized the possibilities of what the art world can provide. I started getting exposed to art direction, production management, costume, and all those kind of places. And I realized that my space belongs in the costume world, belongs in clothing, And that's how I chose my path. I dropped out.
So you've got to set yourself up, right?
Yeah.
You need money, you have to employ people, you have to design, you have to do all of this stuff. How did that happen? You must have been young, in your early 20s at the time?
Yeah. I was in my early 20s. After dropping out of, I didn't drop out. I finished my first year, went to study at UJ and film fashion design. So I had to take myself to university at the time. So I was in between school and working, and eventually I had to drop out because fashion is really, really hard. It's like studying medicine. If you miss one class, it leads to the next. Everything is connected. So I had to drop out and go try to do my thing on the street. And I had promised my family that I want to be this fashion design guy. So they were looking at me, or I need to go get a job. So how I started, fast forward in 2015, broke, hungry, depressed, chilling with my friends. Tsepo the Jean Maker was my Instagram handle. At the time, I had started working with a couple of friends on a jeans brand. It worked out, and we couldn't work together anymore after 2 years, and took a break, and no money, and all of us, I was in my early 20s, so that's the best time to actually ever start anything, because you have no responsibilities. Couch surfing is easy. Doing all those kind of things that doesn't require you to actually put in money is easy. So I betted on myself. I remember this one night I went up with a friend of mine, Sbu, and I was like, hey, Sbu, dog, I'm depressed. It's like, dog, you said, well, the Jean Maker. I was like, okay, cool. Then I started going on Twitter. I was like, hey, something big is happening. Something big is coming. And nothing big came for a good couple of months. And at the time, I had a lot of people around me, and I got a small loan for 8,000 Rand. And with that 8,000 Rand, I started my brand.
Sure, 8,000 Rand. Was it always going to be jeans, denim?
I've always wanted to create something with purpose. There's something beautiful about growing up in the South African township. Like, we love jeans, and now, like, I'm exposed to Sandton and all, and I realize how much actually everybody wears jeans. It's not just like township people, like in Sandton, in Ilovo, in Lenasia, everybody loves jeans. And I've always really, truly, truly loved jeans. I've always realized for you to create a story or tell a story of your art with your outfit, the first thing you choose is a pair of jeans, then you choose your sneakers, and then you choose your tops. And that's how I dress up, jeans and then shoes and then everything else comes after. So I think I chose that path because it kind of had purpose. It connected people. It's a platform that's loved by many people. It's a platform that's understood by lots and lots of people. I've sold a pair of jeans to a 96-year-old man. And there's nothing unbelievable seeing a person who's that age who connects to the pair of jeans. There's nothing unbelievable seeing a 5-year-old who connects to the same thing. So it feels like it's a church. Everybody looks up to it. Everybody's welcome. Everybody can participate. Everybody can touch it and feel it.
Jeans you can use at work in an office. You can use at work if you're, doing a manual job. You can use them at a big event with the right jacket and the right shoes. And that's really the thing about it, isn't it? Is that they're kind of acceptable anywhere, and you can accessorize the hell out of them because you can wear tackies, you can wear slightly smarter shoes, you can wear anything, you can wear high heels if you want. You can do anything with them.
Yeah, jeans are extremely, extremely versatile, especially if you find your fit. When you're a fashion consultant, people think that you always put them like in skinny jeans, or right now what's trending is like baggy jeans, and I always try to make people find a pair of jeans that will fit to their everyday life. Like our sales consultant are probably one of the most amazing people. When you walk into our stores, they'll never sell you something that you'll never get to use, something that's going to pack into your closet. So they'll help you find a pair of jeans that fits in if you're a guy who works in the office and you like going out at night. They'll find you a fit that works for you, for your body, for your shape, and for your lifestyle.
We're talking to Tsepo McLeod, the founder and creative director of Tsepo Jeans, your shapeshifter on The Money Show this evening.
The Money Show with Stephen Grootes is brought to you by Absa CIB, proud host of the 2024 Black Friday edition of the Africa Impact Matters series podcast. Absa is an authorized FSP and registered credit provider.
Tsepo McLeod, the founder and creative director of Tsepo Jeans, also your shapeshifter on The Money Show this evening. Tsepo, you've spoken several times about the importance of the people who, help you find the jeans, the people in the store. And for them to do their job, you have to look after them.
Yeah.
How important is that? Do you remember employing them? You must be quite close to them in a way. You've got to create that.
My team is quite small, so almost every person that's in the team, they had to meet me for the interview and to get employed into the brand. I think for me, what I always looked for is are these people passionate enough to work for a brand that's like my brand? which is still quite small, but like with like a big vision, you know, and they must be sold to this vision. So I was lucky that I when I started out, I had a couple of failures, and I knew where I was going wrong. I knew I was an entrepreneur, but not a businessman. And I knew I had this brand, and I had this big vision. So I needed to have a businessman to come in and help me with making sure that we have a solid foundation for the business. We have we can corporatize the business. So in 2018, one of my best friends, John T. Brosen, became my business partner, and we've been walking the journey together. He's an actual scientist. I'm a creative. He gets me. He gets that, like, this is where we want to go. And he bought into the vision, and we share this vision on a daily basis. Every day we have coffee together, and we share on this vision. We've said no to money more than we've said yes to it, because we're crazy enough to see that this vision will require us to take some losses right now, for us to reap the rewards in the near future. So having the right business partner had allowed me to create a business that can bring in the money and sustain us. Of course, like, we had some shareholding that had come into the business to help us establish ourselves. Fashion business is one of the most expensive businesses in the world, and it's a really, really fastest way of losing money, you know. But with the stores that we've had and the product that we've had, the brand is nearly 10 years old next year, and we've had some good traction, good customers, and those people help us keep our lights on.
There are lots of brosens around, aren't there? There's a running joke on this show that at this point in the Shapeshifter interview, I always ask people, what do you do for fun? And this is the point at which all the corporate CEOs want to run and hide. You know, it's strangely the question, and they all say the same thing. I don't blame them for it. But they say, I spend time with my family. Yeah. Okay. What do you do for fun?
What do? I play golf.
Really?
Yeah, I suck at it.
Come, man, you're in fashion.
I swear.
You can't play golf in jeans.
You can.
Sure?
I was at the golf course the other week, and like one of the guys says to me, hey, you know, like, if it was back, and you'll get kicked out with those pants.
Wouldn't even get into the 19th hole.
Yeah. I can't wait. So I play golf for fun. I really, really love playing golf. It's very hard. I'm not good at it. But I can connect the ball very well. I can get my points. I'll get a par here and there. So that's what I do in my spare time.
Sure. Okay. Do you play with the same sort of four-board, the same group of people? Or
I rotate people around, you know, like I realize I've got a lot of friends who have the same interests. So, and some of them are like, okay, cool, I've never played golf. I'm like, yo, dude, let's go suck together at the golf course. It's nice.
Some people spend a lot of time reading books about leadership around business. Yeah. Some people don't.
Yeah.
Where do you fall?
I'm in between. I listen to podcasts a lot. Yeah. So I love.
Sorry to hear that.
Yeah.
One I can recommend. Yeah.
I love driving, so I'm always in the car. I love listening to my podcasts when I'm on like a very nice route. But I do read a couple of books here and there. I'm part of a book club, and with a couple of young guys who are in different spaces, different professions. And once a month we pick a book. And we come back and review it, you know, so that's quite fun.
So a sort of leadership business book?
It's everything. So we look at everything, you know. What makes a leader is a whole lot of things. You need to understand what's happening in almost everything, you know. So if you don't have a feel of what's happening around you, I don't think you'll understand leadership.
I'm supposed to ask you, where do you travel, and where would be your favorite place? And I'm sorry to say this, but I kind of think I've had to ask you, what would be your favorite place? You would probably say Milan or Paris.
No, Japan.
Wow, okay.
Yeah, I'd love to go to Japan. Hey, I feel like how the Japanese have they have a way of sticking to one thing.
Yeah.
And doing it over and over again and trying to make it perfect over and over and over again. I mean, like in the denim world right now, we buy some of our fabrics from Japan, and it's literally like the Ferrari of jeans, the Ferrari of fabric. And so they've got like discipline and I really want to get to experience that, from how they live their life and how they choose simplicity over everything, how they choose quality over quantity, and how their kids, they're so well respected, they're respectful, and so they've got like this beautiful culture that I want to indulge myself in.
I think it's the most expensive place in the world to play golf. We spoke at the beginning about the three people in your lives, your mom, your grandmother, and your aunt, who played such a big role. And a lot of people will look back on their lives and think, this was luck, or I was lucky there, but this was me. I mean, was luck a big part of it for you?
No. Luck wasn't a big part of it. Hard work was. Hard work was a big part of it. I would sleep in my studio, leave the studio at 5:30 to pretend like I just arrived. So when the securities change shift, they don't see that, So I think for me, hard work was one of the most important thing. And then, they say luck is preparation meets opportunity.
Yeah.
And I guess I was prepared for opportunities that came, and that's how I found my luck.
Tsepo Magala, it's been great having you in our studio.
Thank you so much.
Thank you so much for coming in. Founder and creative director of Tsepo Jeans, your shapeshifter this evening on The Money Show.